Welcome back to the deep dive. Today we are strapping in for a really fascinating story. We're looking at a platform that didn't just innovate, it completely rewrote the financial rulebook for over 1 billion people. We're diving into the rise of WeChat Pay and its whole super app
It's
ecosystem.
a huge topic.
Really is. And our mission today is to try and figure out that magic formula. How did a simple messaging app launched by Tencent become the central digital financial infrastructure for an entire nation?
In just over a decade.
Exactly. This isn't just about tech, right? It's timing, it's culture, it's strategy.
It truly is a masterclass in market capture. When WeChat launched, and this was back in 2011, the core insight from Tencent was seeing where China's market was heading. I mean, it was mobile first, right from the start.
Skipping the desktop phase almost entirely.
Almost entirely, yeah. They saw this chance to just bypass the old models and build an all-in-one digital world right there on the smartphone.
And that gets us to this core idea we have to understand first, the super app.
Right. And that's the central concept. It's so much more than just a popular app. It's a single platform that offers this huge integrated range of services. Socializing, shopping, transport, banking.
All woven together.
All woven together. The whole point is that you, as the user, can do pretty much everything you need to do in a day without ever leaving that one single app.
That sounds like the ultimate convenience. But let's track the money side of it. It starts as a chat app, but then it moves so aggressively into payments with WeChat Pay in 2013. That's a huge pivot.
It is.
What was the gap they saw? What made them think they could jump from just chat to, full-blown commerce?
Well, the timing was just impeccable. They were riding two massive waves at once. First, yes, the explosion in smartphone ownership. But second, and this is probably more important, the traditional banking system in China just wasn't great from a user experience standpoint.
Clunky?
Very clunky for many people,
Yeah.
especially outside the big cities or for small transactions.
Mhm.
It was often slow, complex, sometimes just not accessible. So WeChat Pay offered this elegant digital alternative. And it was built right into the device people were already using constantly. They didn't have to sell you on a new app. They just added a wallet to the app you already opened 20 times a day.
And this is where the story, for me at least, gets so interesting. The tech that powered this whole shift wasn't some, fancy AI or blockchain. It was the humble QR code.
It's the best example of brilliant application over invention.
Yeah.
I mean, in the West, for years, the QR code was kind of a marketing gimmick, right? A link to a website, maybe.
A total joke, yeah.
But in China's mobile revolution, it was the crucial piece of infrastructure. It was
Right.
everything.
So break that down. How did that work in practice?
Okay, so think about it from the merchant side. Let's say you're a street food vendor. You don't need to buy a $500 card reader, set up a merchant account, deal with all that wiring.
Right.
You just need a printed QR code
Mm-hmm.
on a laminated card, taped to your cart. That's it. A customer walks up, scans it with their phone, confirms the amount, and boom, transaction's done.
So it's instant, cheap, pervasive digital infrastructure, basically overnight.
Exactly. It was so simple, so instant, and there was virtually zero cost for the merchant. And that shift wasn't just about convenience for shoppers. It was profound financial inclusion. It brought everyone from big stores down to the smallest cash-only vendors into the digital economy.
And that's what drove the move to a cash-light economy so quickly.
That's what did it.
That makes so much sense. That low barrier for merchants is just,
Yeah.
it's key. But you said earlier it's not a standalone product. The genius seems to be how they embedded it into the social experience.
This is what academics call platform-embedded financial services. They basically dissolve the wall between your social life and your financial life.
I see.
The whole experience is seamless. You're chatting with a friend. You can pay them back instantly. You see a product in a group chat, you buy it right there. You don't leave the conversation to make a payment.
The payment becomes part of the conversation.
Is the conversation. And this, of course, fuels those incredibly powerful network effects. It's a cycle that just reinforces itself. More people messaging means more valuable social connections. More connections mean more payments happening,
And more payments draws in more merchants.
which in turn makes the whole ecosystem more valuable for everyone. It just keeps spiraling up.
That's a powerful loop. But still, people are slow to change their habits with money. There had to be some kind of catalyst, right? A moment that pushed millions of people over the edge from, that's interesting, to, I need this right now.
There absolutely was. And the single most pivotal event, the one everyone points to, was the introduction of the digital red packet feature in 2014.
The red packet. Tell me about that. It sounds like a piece of, cultural engineering.
And absolutely was. It's genius. So the red packet is a huge Chinese New Year tradition, giving money in these little red envelopes for good luck and prosperity. Tencent just digitized it
So you could send money gifts inside the app.
instantly to friends and family. And the brilliance was twofold. First, they made it fun, like a game. You could send a packet to a group chat, and the amount each person got was random. So it went viral.
Ah, I see.
But second, and this is the crucial part, it wrapped the act of digital payment in this really positive, familiar cultural tradition. Millions of people who might have been, a bit wary of setting up a digital wallet for banking, suddenly they're all linking their bank accounts.
Because they want to send and receive New Year's gifts.
Exactly. It was for celebration and leveraged social pressure and cultural tradition to normalize a core financial behavior. Just a genius move.
It really is. Okay, so moving from strategy to the actual tech.
Yeah.
What's happening under the hood? Why could WeChat Pay handle all these tiny micropayments where a big global network, say Visa or MasterCard, might have struggled?
The big difference is the infrastructure, the rails they run on. Traditional card systems use these big international payment rails. There are multiple banks involved, different networks. It adds cost and it adds time. It's not great for, a $1 transaction.
Too much overhead.
Way too much. WeChat Pay, on the other hand, uses these domestic closed-loop rails that are built for speed and low cost. They were designed for the reality of the Chinese market. Huge volume, very low average value. The older global systems just weren't optimized for that.
Okay, so speed and cost makes sense, but what about all the other stuff, the super app part? How did they technically bolt on things like ordering food or booking a taxi without making the app a bloated, slow mess?
Ah, that's where the mini program framework comes in. This is the technical architecture that really made WeChat a digital operating system.
Me programs.
Yeah, think of them as like tiny sub-apps that run inside WeChat. You don't download them from an app store. They just load instantly right there in the WeChat environment.
So there's no installation process.
None. So a business, a restaurant, a hospital, a bank can build one of these lightweight apps to offer their services. E-commerce, food delivery, booking appointments. It's all embedded. You order your coffee, chat with the store, and pay, and you never, ever leave the WeChat interface.
It's like a private internet inside a single app. Let's switch to the business side. All this has to be expensive to run, but they're known for very low transaction fees. So what's the business model, and who are they up against?
The big competitor, the only real rival, is Alipay from Ant Group. Those two basically defined the whole FinTech space in China. Alipay was stronger in e-commerce and more traditional finance, but WeChat Pay had the huge advantage of the social network. The money just followed the conversation.
And the business model.
Right. So you're correct. The transaction fees are tiny. But the value for Tencent isn't transactional, it's strategic. WeChat Pay is the anchor. It locks hundreds of millions of users into their wider ecosystem.
I see.
And once you're anchored, they can generate revenue from advertising, from merchant service fees on those mini programs, and really importantly, from selling financial products through their own digital bank, WeBank.
So the low fee is just the cost of keeping you there. It sounds great for the consumer, but doesn't that create a kind of monopoly? It seems like it would really limit consumer choice in the long run.
That is the big question, and it's precisely the concern that brought the regulators in. The ecosystem is so strong, the network effects are so powerful that it creates this massive barrier to entry for any new competitor.
The switching cost is too high.
It's almost insurmountable. If all your friends, all your favorite stores, all your services are on WeChat, where are you going to go? That scale is their ultimate defense.
And success that big always attracts scrutiny. So let's talk about those regulatory headwinds. After 2020, things changed. Why did the Chinese authorities suddenly start taking such a hard look at these platforms?
The shift was seismic. They went from being supportive to being very strict. And the concerns were, well, there were a few. First was just systemic risk. When one app becomes the financial backbone of the economy, any failure could be catastrophic.
Right. Too big to fail.
Exactly. And second, maybe even more critically, was data. The fact that one company controls your social life, your buying habits, and your finances, that's an unprecedented amount of centralized data on every citizen.
So the regulators stepped in.
They stepped in hard. They moved to limit how these private companies could integrate financial data with all that other consumer data. They demanded stricter risk controls, more consumer protection, and basically forced them to build walls between different data silos.
Yeah.
It requires constant, expensive adaptation from Tencent.
So they're trying to keep the convenience of the super app while being forced to deintegrate their data. That's a tricky balancing act. What about their global reach? It's dominant in China, but we don't really see it here in the West.
Well, international expansion has been really gradual and very targeted. You'll see WeChat Pay in places that get a lot of Chinese tourists, for sure.
Hmm.
But trying to replicate that whole super app model abroad is just incredibly hard.
Different markets, different rules.
Completely. You're dealing with fragmented markets, really strong local competition from banks or, PayPal. And then every single country has its own unique regulatory framework.
Yeah.
The legal requirements for currency conversion, for KYC rules, for data storage, it's a minefield.
So the centralized efficiency they had in China just doesn't translate across borders.
Not easily, no.
Okay, let's pull back for the final analysis. Thinking about the socioeconomic impact, beyond just convenience, what did this ecosystem really achieve?
I think we have to come back to financial inclusion. I mean, the ability for millions of tiny merchants and rural users to suddenly join the digital economy almost overnight. That was monumental for China's growth. It completely leapfrogged the limitations of traditional banking.
And it went beyond just buying and selling things.
Oh, absolutely. WeChat became this essential digital layer for public services. Think about it.
Mm.
Using the same app you use to chat with your friends to also book a doctor's appointment, pay your electricity bill, use public transit, or even access government services.
That level of integration is just, it's unheard of in most Western markets.
It's extremely rare. Here, services are still very fragmented, very specialized. And that, I think, is the global lesson from WeChat. It shows a model where everything is unified, where finance is just another feature of daily life, not a separate activity.
So the real winner wasn't the company with the best financial tech, but the one that best integrated into human culture and behavior.
Precisely. If you control the social layer and the daily utility layer, you're in the perfect position to own the financial layer as well. And that model has absolutely sparked conversations about super apps everywhere. But as we said, the conditions that allowed it to flourish in China are very, very hard to replicate.
That brings us to the end of our deep dive. The story of WeChat Pay is just a textbook case of strategic alignment. You have ecosystem integration, you have technological efficiency from the simple QR kind, and you have cultural genius with things like the red packet.
And leave you with one final thought. The case of WeChat Pay really shows that the future of finance might not be defined by banks, but by the platforms that control the social fabric of our lives. So given the regulatory pushback we're seeing now against integrating all that data, we have to ask, what's the next frontier for these platforms? How will they try to keep that anchor control over us, the users, without crossing those new lines on data privacy?
That is a deep, profound question, and one that will likely define the next decade of tech and money. We hope this deep dive gave you a lot to think about. We look forward to diving into the next stack of sources with you soon.